A perfect storm. That's exactly what UnitedHealth Group, one of the largest and most powerful healthcare companies in the world, is facing right now. From catastrophic cyberattacks that crippled the American healthcare system, to heavy Department of Justice investigations that threaten their business model, to out-of-control medical costs that are crushing their profit margins, UnitedHealth Group, traded on the stock exchange with the ticker UNH, seems to be under attack from all sides. The stock, which for a long time was a Wall Street darling and a pillar in many dividend portfolios, has taken a hit. And the question every investor is asking now is, does this drop represent a historic buying opportunity to get into a giant at a discount, or is it a clear sign to run, a classic trap? In this video, we're going to dive deep into the risks, uncertainties, and fierce competition that UnitedHealth faces. And most importantly, we're going to analyze whether its economic moat is strong enough to survive this crisis. Stay with me until the end to understand if UNH is a worthwhile bet or a risk you shouldn't take. The company, which operates through two main fronts, UnitedHealthcare, its health insurance arm, and Optum, its diversified health services division, is facing one of the most turbulent periods in its recent history. Imminent risks, a multifaceted crisis. UnitedHealth Group is under heavy pressure from a series of risks that directly impact its operations, finances, and reputation. 1. Cybersecurity under scrutiny. The years 2024 and 2025 will be marked by critical failures in the company's cybersecurity. Two large-scale attacks on Optum subsidiaries, Change Healthcare and Episource, exposed data of potentially over 190 million people, causing chaos in the American healthcare system, interrupting the processing of claims and payments to providers. The direct financial costs of the incident, added to revenue losses and massive investments in remediation, are astronomical. Besides the financial damage, the harm to reputation and the loss of trust from customers and partners represent a long-term risk. 2. Regulatory pressure. UNH is in the sights of the United States Department of Justice, DOJ, on multiple fronts. Antitrust investigations into its acquisitions, such as that of Change Healthcare and the attempted purchase of Amedisys, question the legality of its expansion and the potential harm to competition. Simultaneously, the company is under investigation for possible fraudulent billing practices in its Medicare Advantage program, where it is accused of overbilling the health risk of its beneficiaries to receive larger government payments. These investigations could result in billions in fines, forced divestitures, and severe restrictions on its operations. 3. Rising medical costs. An unexpected increase in the use of healthcare services, especially by Medicare Advantage beneficiaries, has put pressure on UnitedHealthcare's profit margins. Higher than expected medical costs led to financial results below market expectations and forced the company to reduce its profit projections for 2025, shaking investor confidence. 4. Leadership instability. Amidst this crisis, UnitedHealth Group underwent a change in its leadership, with the replacement of its CEO and CFO in 2025. This instability at the helm adds a layer of uncertainty about the company's ability to successfully navigate its current challenges and its future strategic direction. Uncertainties on the horizon. The mentioned risks create an environment of deep uncertainty for the company's future. The full extent of the financial and operational consequences of the cyberattacks is still being calculated. The outcome of the DOJ investigations is unpredictable and could fundamentally alter the competitive and regulatory landscape in which the company operates. The future trajectory of medical costs and UNH's ability to adequately price its health plans in an inflationary environment with increased service utilization are open questions. The competition, an integrated battlefield. UnitedHealth Group faces robust and constantly evolving competition in both of its business segments. On the UnitedHealthcare side, the main rivals are other giants in the health insurance sector, such as CVS Health, owner of Aetna, Cigna, Elevance Health, formerly Anthem, and Humana. Competition is fierce for market share, especially in the lucrative corporate plan and Medicare Advantage segments. What makes the competitive landscape even more complex is the industry's vertical integration. Competitors like CVS Health and Cigna are not just insurers, but also healthcare service providers, competing directly with Optum. Optum, in turn, competes with a diverse range of companies, including other large pharmacy benefit managers, PBMs, like Express Scripts from Cigna, health data analytics companies, and telehealth and medical service providers. This vertical integration between insurance and service providers, adopted by its biggest competitors, mirrors UNH's own business model and intensifies the dispute for every dollar spent in the healthcare ecosystem. The economic moat, wide but under threat. Despite the headwinds, UnitedHealth Group still possesses a considerable economic moat, although currently under severe stress. The moat is supported by two main pillars. 1. High switching costs. For large employers and government plans, switching from a health insurer the size of UnitedHealthcare is a complex, expensive, and disruptive process. System integration, employee familiarity with the provider network, and administrative processes create significant barriers to customer exit. 2. Efficient scale and cost advantages. UNH's massive size gives it significant bargaining power with hospitals, doctors, and pharmacies, theoretically allowing it to achieve lower costs. Its vast insured base dilutes fixed costs and risks. Furthermore, integration with Optum allows the company to collect and analyze an immense amount of health data, which can be used to optimize care management, identify risks, and, in theory, reduce costs. The synergy between UnitedHealthcare and Optum, where the insurer's claims data feeds Optum's services and intelligence, and vice versa, creates a feedback loop that is difficult for smaller competitors to replicate. However, current risks and uncertainties threaten to erode this moat. Antitrust investigations may limit its ability to grow through acquisitions, a key strategy for its expansion. Cybersecurity failures and fraud investigations may lead customers to question the company's reliability, potentially decreasing perceived switching costs. If the competition manages to offer more efficient and lower-cost care models, UNH's scale advantage could be neutralized. In short, UnitedHealth Group is at a crossroads. Its size and integrated business model give it an economic moat that protects it, but the regulatory, operational, and reputational challenges it faces are severe. The new leadership's ability to address these problems head-on, restore confidence, and adapt to a rapidly transforming healthcare environment will determine whether its economic moat remains wide and deep or begins to narrow dangerously. In the end, the decision to invest or not in UNH today comes down to a single question. Do you believe that the strength of its business model and its economic moat will overcome these immense challenges? Or do you believe that the reputational damage and regulatory and financial risks are too great and that the giant is more vulnerable than ever? There's no easy answer here. The upside potential is great if the company can navigate this storm, but the risks, as we've detailed, are equally significant. And now I want to hear from you. What's your thesis for UnitedHealth? Are you buying, selling, or just watching from afar? Leave your opinion here in the comments. If you like this video, don't forget to give it a thumbs up, subscribe to the channel, and hit the bell to not miss our next content. Thanks for watching and see you next time.